Good evening. This is the video newsletter for Buy Sell Short for Thursday, November 11th. Red session today on Wall Street. Disappointing or disappointment with regards to Cisco's earnings report and after hours. They did report 12% growth, but lower than what the market expected, and they have yet to ramp up their revenue projections, which was a big disappointment. Cisco stock got hammered down 4 plus, but considering the carnage that was expected from Cisco's report, today's action really was not that bearish. If you're a short in this market right now, you've got to be going, what the hell do we have to do to get this market to go down? Because we had the dollar up today, we had the Cisco news, and we still had a bunch of stocks breaking out. If you didn't look at the major indices, the action and the trading opportunities out there today were just fantastic. As I mentioned in the chat room, the action was sort of similar to what you'd expect on a 100-point up day, not a down day. One thing to keep in mind, and probably what's helping keep this market higher, the Fed quantitative easing QE2 starts tomorrow, with the Fed set to buy $6 to $8 billion in bonds. And what that means for the layman is, starting tomorrow and through the next 3 weeks, the Fed is about to pump $105 billion worth of liquidity into the markets. There are two places for that to go: commodities and stocks. Looking at commodities or at the dollar over the last week has actually been on a bounce move. And as I mentioned the other day, more of this has to do with the crap going on in Europe than anything else. Right when the dollar should be tanking on massive dollar printing by the Fed, all of a sudden we have the euro crisis rear its ugly head. This time Ireland is the issue. Ireland's supposed to default on their debt here real soon. In the coming days is the expectation, and that has taken the wind out of the euro and pushed the dollar up, the euro down, and sort of weighed on the markets here. Resistance on the dollars, the 50-day moving average, 79. I'd be very surprised, especially with the Fed money printing presses going into full swing tomorrow, that we're going to see the dollar continue its moves. But anything is possible in currency land. Looking at the major indice charts, here you can see on the Dow 15-minute chart, we're in this bullish falling wedge right now, and we're just above that uptrend line that's been in place for the last month. The last time we had a sell-off, well, for lack of a better word, was back there last week of October. We saw similar action, and then we busted out 300 points to the upside. So, looking at the daily chart, you can see we've retraced all the way back down to the 20-day exponential, which also marks the upper trend support of this rising wedge here. Indicators are coming off a little bit, which is to be expected given the extent of the move. SMH continues to be a great barometer for the market. We had a big sell-off in the SMH, traded down in the mid, almost touched the 20-day exponential, was a few cents off that. And then before the overall market started bouncing, we saw buyers start to come into the SMH and a move back over 30, which is why I just love using this SMH. So we're right back down to the upper trend line or the lower trend line of this slow move higher. So let's see how we act here at this 2950 area, especially with all that Fed money coming in. Given the surprise from Cisco, it's really bullish that we held up like we did today, and that's all I'm going to say on that matter. Let's jump into some stock plays. WYY, WidePoint, cybersecurity stock. Very nice consolidation on this one over the last month. They posted really, really good earnings report yesterday. We've got very nice support at the 20-day exponential 135, and breakout here is 145, and we're looking for a move to a $1.60 plus here. We should be looking at a confirmation from a positive MACD cross in the next couple of days. Stochastics also looking to break out here as well. Breakout stocks are what is working right now in a big way. If you were in the chat room today, one of our breakout plays that we jumped into was ACPW at a $1.90, going by the rule of two. Rule of two is stock breaks two, runs to 210 to 220 almost 90% of the time, and more. Recent examples of that over the last couple of days: GLUU, which was a trading alert a month ago. That stock is up 75% from our call, but it broke two a few days ago. and up 75 cents from that $2 break. So this one, we're looking for some continuation on it to the 220 plus area over the next day or so. But back to WYY, another breakout play, big move, consolidation. We're looking for another move higher in the near term. LVLT monster winner for us. We are up, 30 cents on this from our call 4 days ago. They snagged a contract with Netflix, which is the big daddy. This is a monster volume trader that's all over the place. You know, if the market wasn't down today, we would have seen this one close above $1.20. So if we do get a bounce in the market tomorrow, would look for some more continuation on LVLT to our next target, 125, and then 135 after that. NMTI, biotech play, been consolidating since its bad news back there in June. They report trial results on Monday, so they're hinting at a positive spin on those trial results that caused that tank. And remember, this biotech stock is one of the very few that has yet to have a biotech tanker bounce. So breakout here is a break at a close above 38, and we'd be looking, to a move. We could possibly get 50 to 60 cents on this one. RSI looks like it's trying to break 50 for the first time. Stochastics in the basement. So we get a nice little press release on Monday, and it'll be off to the races for this little biotech play. NEI, big disappointment for us since its earnings report. Total gap fill on this one. It's been consolidating nicely here, though, over the last 2 days. And remember, like it did in mid-October, we had that big run, disappointing sell-off, consolidated, and then boom to a new high. So looking for the same sort of action here again. And this, I think, is going to be a stock in the very near term that we're going to be adding a $2 break on. And let's leave it at that. PKT, very good earnings report. I think this is a great play on the Netflix level 3 video traffic momentum that's out there right now. We've got a nice support here at 50 cents. And if Cisco's earnings report is telling us something, little companies are starting to eat up Cisco's business, is what that's telling us. And Cisco is not a company that sits on its ass for very long. They are an active accumulator of other companies. PKT's technology is better than Cisco's at the moment, making it a definite Cisco target in my opinion. Long-term breakout is 60 cents, and it's off to the races on this one. This is a stock that I would not be surprised to see trading up here in the 80 cent to $1 area by the end of the year. And let's leave it at that. XSEL, our little China advertising play, continued its breakout move today. Continue to ride this one higher. Try your stops to 28 cents now on this one, and just go with the flow. OPXT beaten down from a really decent earnings report. A little hangover today from Cisco's report. Stops 136. Would give this another day or so. Target is at least a bounce back to that 20-day exponential up there at $1.49. So that's really it for the video tonight. We've got a couple of nice setup plays going into next week. Recall, I will be gone next week at the Traders Conference in Vegas, so there will be no videos. I will try to send out some email alerts and some updates if I see some trades worth doing, but going to be taking a week off, and I will see you guys later next week. Any questions, definitely feel free to shoot me an email or send me an instant message in the chat room tomorrow, and I will see you guys in there. Good night.